Hi everyone, my name is Sydney Brown, financial coach and budgeting expert, here to help you create and stick to a budget so that you can stop living paycheck to paycheck and start spending money with confidence. This channel is for single black women who feel overwhelmed when they think about their financial future, confused when they think about managing their money, and shame when they think about their financial situation. Make sure you hit the subscribe button so you never miss another video. Alright, so this video topic came from my Instagram stories from Matt. So shameless plug, if you don't follow me on Instagram, you definitely should, because that's where I source, at this point, 100% of my video ideas. So what I want to start with is, what is an IRA? 401ks, IRAs, etc. are not investments themselves. I want you to think of them as buckets that hold your investments. So an IRA, it stands for an individual retirement account, is a bucket that you choose to hold on your own. But that can be in addition to and separate from something like a 401k that is held by your employer. So you have individual retirement accounts, which would be an IRA. And then you have employer-sponsored retirement accounts, which are things like 401ks, TSPs, things like that. With an IRA, you have complete control over which investments you put into them, where that, which company holds those investments, and the benefit of being able to control where your account is held that means you have complete control over what type of fees you are being charged. Personally, I think this concept is best explained in the book Simple Path to Wealth, which I have right here. I would highly recommend reading this book if you haven't already. I feel like it has some great investment advice in there, and I really do think of it as more of like a textbook for how to approach investing. Personally, I really love the way that it's explained in this book. Because if you're someone like me, I feel like when I was trying to understand this concept for the first time, I didn't understand it the way that it is explained in the book, and I think that I felt like it was really beneficial for me and being able to be much more knowledgeable about how to approach the topic of investing. So the next question I wanted to work into is, what is a Roth IRA? A Roth IRA is a type of individual retirement account that allows for tax-free withdrawals during retirement. Your contributions to your Roth IRA are after tax. So after the money that you put into the retirement is taxed, as compared to a traditional IRA where the money that goes into the account is pre-tax, so before the taxes come out. With a Roth IRA, there are guidelines about how much you can contribute each year, who is eligible to contribute, things like that. There are parameters around it. But why does this matter? Why does this matter at all? So I think a lot of people overlook the benefit of a Roth IRA because they're like, well, I don't get a tax benefit to my contributions to a Roth IRA. No, yes, that is absolutely true. While you don't get an upfront tax benefit when you are contributing to your Roth IRA, your withdrawals from your Roth IRA are tax-free. In addition to tax-free withdrawals, your contributions can grow tax-free. In addition to Roth IRAs not being taxed when you withdraw, and your contributions growing tax-free, you also don't have to worry about required minimum distributions. So this means that you can leave the money in the account tax-free and allow it to keep growing. What are required minimum distributions, or RMDs? This is essentially a way for the government to not allow people to just put their money in an IRA and let it grow tax-free and never get the tax benefit from that money. So RMDs are essentially when you reach the age of 72, the IRS requires you to withdraw a certain amount of money from the account, RMDs are considered taxable income in the year that they are withdrawn. And this essentially exists to prevent you to indefinitely defer your taxes. So essentially the government is like, we're gonna get our money. You can either take it now or you can take it later. It doesn't matter how they're gonna get their money, but they're gonna get their money. How do I start a Roth IRA? Incredible question. Great question. Love the question. Step 1, determine eligibility. IRAs have income limits that can reduce or eliminate your ability to contribute to a Roth IRA. So check your eligibility to determine whether or not you are able to contribute to a Roth IRA. If your modified adjusted income is less than $138,000 for single filers and $218,000 for married filing jointly, you can contribute up to the limit. Income limits above that, your contribution limits begin to phase out until they are completely eliminated at $153,000 for single filers and $228,000 for married filing jointly. If your income exceeds these limits, the backdoor Roth IRA strategy might be the best situation for you to consider. So step 2 is to choose a brokerage. And when I say choose a brokerage, what I really mean is choose Vanguard. Unless, of course, you have no choice. When Jack Bogle founded Vanguard, he did so with a unique strategy that's still unique to this day. Vanguard is client-owned and operated at cost. That means as an investor of Vanguard funds, the interests of Vanguard and your interests are aligned. By definition, every other investment firm has competing interests. They have the interests of their company owners and the interests of the investors in their funds, which don't typically align. Because Vanguard is operated at cost, any profits that they make would go back into your pockets. So as a result, they choose to give the minimum required fees. These fees are represented as expense ratios. At Vanguard, the average expense ratio is 0.09% when compared to the industry average, which is 0.54%. And I know that doesn't seem like a lot, but when compared to when you actually take that from your own money, that can be substantial. So I just want to take a little sidebar for a second to just make a few, statements. First of all, this video is not considered investing advice. I don't want you to take this video for investment advice. It is for educational purposes only. Number 2, this thing is not sponsored by Vanguard. Definitely not. And I say that only because by giving such a strong declaration of Vanguard, I think it can be misconstrued that it's sponsored by Vanguard when it's not. I sponsor all of this. This is sponsored by Sydney. So there is no sponsorship, attached to this at all. And so as a result, I can give my personal experience. So in regards to them charging the minimum fees, I think you have to, as a member of Vanguard or an investor in Vanguard funds, personally, I have to remind myself that they don't always have the easiest or most user-friendly services, and I think that's because they charge the minimum fees. So as a result, it might be hard sometimes to figure out how to contribute to your Roth IRA. I think sometimes it might be a little challenging to figure out how to open a Roth IRA. I think sometimes it may be challenging to figure out how to roll over money to your Roth IRA. However, what I have always found is that their customer service representatives are always willing to help you. And I always call them if I don't know what I'm doing, if I'm trying to figure something out on my own and I'm not really finding the information that I'm looking for. By giving them a simple call, I've always been able to overcome whatever barrier I was having and trying to contribute or roll over or whatever. So just keep that in mind as you are opening a Roth IRA or whatever account you decide to open. with Vanguard if you do choose to open a Vanguard fund. Those minimum fees, I feel like oftentimes mean that they don't always have the most user-friendly services. So keep that in mind as you're opening. So step 3 is going to be build your portfolio. As you're trying to build your portfolio, ask yourself 3 questions. Question number 1, what stage of your investing life are you in? Are you in the wealth accumulation phase or the wealth preservation phase? This does not necessarily correlate to your age, but it could. Question number 2, what level of risk is acceptable to you? Question number 3, is your investment horizon long-term or short-term? The next thing you're going to need in order to build your portfolio is 3 tools: stocks, bonds, and cash. So what is a stock? Stocks oftentimes provide the best return on investment and often serve as an inflation hedge. An example of a stock is VTSAX. Bonds. What is a bond? Bonds often provide income and serve as a deflation hedge, and they are what smooths the rough ride stocks can often cause. An example of a bond is VTLX. And then finally, cash. Cash is good to have around in case of emergency, and it's also very good to meet your routine expenses. Another definition I feel like we need to go over in order to help you build your portfolio is, what is an index fund? An index fund is a collection of stocks or bonds that is intended to mimic the market. So an example of the financial market would be the S&P 500. So the S&P 500 is a collection of 500 of the largest companies in the United States, the largest publicly traded companies in the United States. Index funds have lower fees and expenses than actively managed funds. And index funds follow a passive investment strategy. Index funds intend to match the risk and return of the market based on the theory that over time, the market will outperform any single investment. Okay, so the next thing that you should know as you're trying to build your portfolio is that investments come in different flavors. Vanguard offers many share classes for multiple different funds. So, for example, VTSAX is an investment, but it has the same portfolio or the same type of funds in it as VTI. The main difference between the two is that VTSAX is a mutual fund and VTI is an ETF, which is an exchange traded fund. VTSAX and VTI are the exact same in terms of asset class, the same number of stocks, expense ratios. Another main difference between VTSAX and VTI is that VTSAX has a minimum investment amount of $3,000, whereas VTI has no minimum. The minimum is like $1. So the next thing would be to fill your investment account based on whether you're in the wealth accumulation phase or you're in the wealth preservation phase of your investment life. Some example portfolios might include, if you're in the wealth accumulation phase, you might want to invest 100% in stocks because you have a long time before you intend to take it out. Over the long term, you will earn more than in the short term. If you're in the wealth preservation phase, consider investing 75% in stocks, 25% in bonds, and 5% in cash. Alright, so there you have it. I hope this answers your question about how to open a Roth IRA. If it doesn't or it stimulates more questions, just like I said at the beginning, please let me know. Slide into my DMs. I did my best to answer this question. Let me know in the comments, how do you feel about investing? Like I said at the beginning, I felt like before making this video, I felt very confident. But as I was doing my research for this video, there's a lot to learn, and you know, no one is, well, I'm not 100% expert on this topic. I'm not gonna, you know, pretend like I know everything. No one does. So make sure you subscribe so you never miss another video. Also, if you want those actionable tips that can be gained from subscribing to my free newsletter, please subscribe to the newsletter. And that's it for today. Bye!